That's a great question, and the reason it's such a big question is because we are facing these unprecedented times, right? It's the first time in Bitcoin's history where we have this aggressive Fed moving with these huge rate hikes, and we have inflation at 8, 9, 10, 11%. And so you could go back in previous bear market cycles in Bitcoin, and you never had these issues. So it means that if anything, this is going to be the worst down cycle we have ever experienced in Bitcoin. I do think it bottoms out probably between 12 and 18 months from November, so November through early 2023. But I do want to be clear is that if you compare this to the dot-coms, you have to think that it could take a while for us to get back to 68, 69,000 in Bitcoin. It took quite a long time for the NASDAQ to get back to the pre-dot-com era highs. I also think that to wipe out the nonsense, you may even have to go below my low-end target of around 12,000 on Bitcoin. I hate to say this, and I don't mean to scare anyone. And by the way, in all fair disclosure, I own Bitcoin that I'm going to be holding from around 19,000, right? A small position I started to inch in because I don't know where the low is going to be, but I'm preparing for the worst-case scenario of 3,500.
Wow.
Yeah. And again, just to be clear on that, as a trader, and this is going back to education, if there's one thing I've learned in my trading career is that you prepare with your targets, but you also prepare for a worst case scenario. You need to look at your worst case scenario and figure out how am I going to react? What am I going to do if this does happen? And play defensively.
They say that, some people have said that it's easy to become a millionaire during a market downturn or during a recession. That's how you build your wealth, they say.
Yeah, so I've always gone on the assumption that, you have a bull market, that's where you get a lot of millionaires, like crypto millionaires, right?
Yeah.
It's usually the opposite because bear markets, first of all, we're generally programmed as humans to be bullish, right? I always like to say this, but if you're depressed, if you're kind of down on life, what does the doctor do? They give you medication to make you positive. So inherently human beings are positive. We want things to go up. So when they don't go up and our bullish feeling, that greed, that amazing feeling of, oh my goodness, I'm going to make so much money, doesn't work out, that's usually where people give up money. Now, as a trader, yes, you're right about that. Trading where you're buying the dips, you're selling the rips. If you can read the charts, you can make a lot of money. In fact, this has been my best swing trading year, I think, of my career.
Wow. Okay, let's move on to another one. PlayDaws, another question from PlayDaws. Hey Gareth, what's your favorite go-to, most trusted TA indicator if you can only pick one?
Wow. All right, so number one, as a trader, right, you have to, you're asking me about picking one, and I will pick one. But in general, you never want to make a trade off just one indicator. And the reason you don't is because what if the next indicator you looked at is pointing in the opposite direction? So what I like to do is I like to find 2 or 3 factors, I call them factors, that all point in the same direction. That usually gives me that 70 to 80% success rate on a trade. Now, with one factor, I would generally say a sharp drop into something like the 200 moving average or a Fibonacci level retrace after a big move up, and you buy the pullback. Essentially, you notice the trend is up, you get that ridiculous up move, you get a sharp pullback as people kind of panic and dump, take profits, and then you buy that major support. And notice I'm mentioning the 200 moving average, not the 50, not the 20. 200 is really the mega, the behemoth of moving averages.
Suppose something breaks below, you and I have talked about this several times in our regular interviews, but suppose something breaks below the 200-day moving average. Is that a bearish or bullish signal? It could go either way, right?
So there's one thing that I look for with any level. So it could be a trend line, it could be a moving average or anything. If you break below, number one, that could be a fake out. So a lot of investors put stops right below key levels. Well, guess what? The algorithms know these things. So what they're going to do is they're going to pierce that level, knowing that your stop is going to get triggered, you're going to get out of your position, and then oftentimes they'll rip it the other way. Great example right now, Bitcoin. Bitcoin has multiple times pierced the 2017 high, never confirming. What I use is a confirming signal, which is something we'll talk about in a little bit in something that I'm going to be teaching. But basically, there's been these whipsaws, and then it goes right back above that 2000. So basically, you have to watch to see, does it confirm below that level? If it confirms, then it's a real breakdown. If not, I don't get out when it pierces a level like that until it confirms.
Okay. Moving on to another question now. Gareth, can you please write a book?
I'm too tired to write a book, but almost as good as, even better than a book. I do have the educational stuff that's coming out, which we'll touch base on later.
We're going to touch base on at the end of the interview. I mean, people have been asking some of the questions for resources for beginners. Do you suggest, besides what we're going to talk about, do you, reading material, basically how did you learn? This was before YouTube, right? You grew up before. There was a YouTube university back then.
I was, when I started, it was AOL dial-up and $20, $30 trades on E-Trade, that in and out, $20, $30. So it was pretty hefty. But basically what you want to do is you need to build a foundation. So again, it's understanding the three aspects, which I kind of covered before, the three principles, which is psychology of human nature. You have personal discipline and emotional control. So those are two things you have to do. And then really the next one is just learning the basics of a chart. What is a candlestick? What is a topping tail? What is a bottoming tail?
Right.
Just the basics to build that foundation. And then what you really need to do is you need to find people that know what they're doing, that have a proven track record, that teach well, and you have to follow them. And I wish I did. Looking back on it, again, it was pre-YouTube when I first started. I didn't have those assets. Twitter wasn't really around at that point. I think it was, I don't know, even before Facebook, even before MySpace, Friendster, back in the olden days. So I mean, again, I had to do it on my own. I hope that me talking about it helps people, jump a lot of that learning curve.
And guys, I'm not suggesting that just because we have the technology these days that more information is necessarily better. There's a lot of noise out there that you've got to sift through, and there's a lot of people giving bad advice. A lot of scammers and fakers out there.
Can I make a comment on that? Because I think that's so important. Is that one of the biggest? It's a positive and it's a negative. But social media, because things get amplified. I mean, before social media, you basically had the Wall Street Journal. You had some things with, by the way, we're not the greatest either. But now you have social media where people called influencers. By the way, the term influencer, to influence. So there's a purpose for them, and you have to really be careful. So you can find great information on the internet, but you can also really get suckered into things, whether they're pump and dumps or whether they're just people that are just trying to talk up their own book and push Bitcoin higher and stuff like that. So be careful out there.
Definitely. I mean, don't get on the wrong side of the trade. Don't get sucked into a pump and dump. You could lose your money or go to jail. I don't know what's worse these days. Do you keep your money if you go to jail? Anyway, that's a discussion for another time. Another question. We're going to get into the market questions now. This one's from Giorgio. Thank you for answering my question before. May I propose another one, please? In the case of military escalation in Taiwan in 2022, what would be the safest asset for Gareth besides the US dollar?
Wow, so that's a good question. So I have been looking to accumulate, and I have accumulated some stocks in China, some in the Hang Seng market. It's my belief that will be the next big bull market. I know a lot of people would disagree. The one caveat, like you're saying, is what if China invades Taiwan, and what are the repercussions? So certainly, it's a very calculated percentage of a small amount of a portfolio. But I do think that the valuations there, the fact that the Chinese government is much more apt to stimulate and continue to stimulate to keep people happy there, it makes it a much more intriguing investment opportunity. I also think South America hasn't had a big run. I mean, what it's interesting is I look at these charts, right, and I look at like Brazil, the Brazilian ETF, and it's down at levels. It's trading at levels that it was trading in 2010. You look at the Chinese market, same thing, levels it was trading in like 2010, 2008. Yet you look at the U.S. markets, and they've gone absolutely vertical until this year. And they've outperformed. Well, money managers were only investing in U.S. They pulled all their money out of a lot of these foreign markets because this is where the money was to be made, right? Well,